Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at one heck of a breakout here on crude. Yesterday we had kind of a range, more bearish sentiment really, just kind of grinding its way lower. If anything, a super lazy bear channel. That's really about it, right? So nothing really impressive about yesterday that would stand out or cause any concern. And then we gapped down this morning for a little bit of a larger move down. Now that gap down, it's not very big. We did gap underneath all of yesterday's price action, so it will be seen as a breakout attempt. So what the reaction is to that breakout is important, right? We need to know what happens. And when we see the first candle of the day showing this amount of weak bullishness, we already know what's happening, right? The buyers are running out of steam. We gapped down, but they're not showing up to the party. Normally with a breakout, you'd want to see a breakout pullback and a move back down again. In this case, we broke down on the open, right? We gapped lower, causing the breakout, and then we're just kind of stuttering our way sideways. And then on that bear candle, we turn back down again, right? What is this reminiscent of? Well, it's kind of reminiscent of a flag, isn't it? We have a flag formation right here. It just so happened that it was on two candles, but we had a flag that formed and it broke down. So you're expecting a continued amount of bearishness to the downside. That is a beautiful sell to continue that bearishness after the gap, after the end of day selling from yesterday. We open up weak buyers, probably nothing more than a little bit of profit taking, and the sellers show back up on the table to drive it further down. Now, inside of this, we have a beautiful buy candle show up, right? And that's after the bears had an engulfing bar trying to get the move going back down again to finish the job off from the sell here. And it turns back around into a bull. That's really nerve-wracking. Sellers do not want to see that. But then we get this candle, right? Any buyer that bought into that, if they see that, there's no way they're sticking around and hanging on to it, assuming, oh yeah, we're totally going to go higher. Look at this beautiful bull candle, right? Nobody on the planet said that. Everyone looked at that candle and said, nope, I'm going to close it. And they close out of the position, which is why I have a sell there. We know that buyers attempted here and they gave up. And that gives us a reason to become sellers to drive the market back down. You're not looking very far. The sellers mostly already hit their objectives. You're just looking for a quick tap of the lows to see what happens from there. So a beautiful sell right there, knowing the buyers gave up. But then we start getting some clues, right? Now, we start pushing into the lows, and they immediately close outside of it. That's a very good sign for continued bearishness. And then that good sign turns back around into a bad sign, right? They close outside and then right back in. And that is not good for a breakout. The sellers, if they are going to take this lower, need to show up to the party and slam the market down. And they didn't, right? They couldn't even break underneath or close underneath that low. Buyers try coming in. They couldn't trigger in. We get a huge bull engulfing candle, which is actually the first part of the trade of the day. If you haven't seen it yet, you'll understand what I mean by first part. It was a phenomenal trade, caught this whole move up. But the fact that they came back to that level again, held that area of support, turned back up again going into a bull engulfing candle. That's a huge just confirmation of what we're seeing. The sellers are running out of steam. We know that the buyers want to try to come in, but they didn't want to do it at the open. They're starting to down here at the lows, and now we have confirmation that, yeah, they're here, and they're turning back to the upside. Sellers give it one more go, and they completely fall apart. That is a huge sign to the upside, seeing the buyers coming in and looking for probably back to the high of day, right? That's all we're really looking for, because that would turn this morning into a range, and you're looking for a range rotation. You buy off the lows, you come to the highs, you sell off the highs, you push down to the lows, etc., etc., etc. We come back to the moving average, knowing that the sellers have already given up. We know that any sell attempt that would otherwise be beautiful is more likely going to be a trap. We hit the moving average, very, very likely that sellers are going to try to get in on that sell because it's the moving average, right? It's the first time we tested the moving average all morning. It's a nice bear candle. What they're not paying attention to, though, is that the sellers already have their objectives and they're not even in the market anymore. If anything, they're long or flat. So no sellers are left to try to carry this market down. So not a good sell in the least. We trigger underneath it by one tick, turn right back up into a bull candle, and that is your signal. The sellers are trapped. Get in. The market is going higher, at least to fill their stops, maybe back up to fill their stops beyond that, and more likely to get back to the high of day to finish that rotation of the range. So a beautiful run higher, and we ended up breaking out 100 ticks to the upside. Look at this massive bull candle. Right? So this gargantuan bull candle is going to be seen as a gift from the market gods, right? We slam higher. Buyers have been in from the lows down here. So they know that, well, you know what? we just rocketed up 100 ticks. I'm not going to let this profit slide through my fingers. I'm going to close the trade, right? As soon as that candle closes, they close the position, and that's going to cause a little bit of a drop lower, which is why there's a small little red arrow here. You're not anticipating much. You're looking for a 10, 20 tick scalp, but that is an opportunity that after such a huge move higher, we know that the buyers are exhausted. Not only do they not have any ammo, they threw the gun too, right? The ammo's gone, the gun's gone, everything's gone. They need to reload. So you're expecting a little bit of a pullback. In this case, probably a little bit more than a little bit, but you're expecting a pullback knowing that the buyers just don't have anything left in the chamber to fire at the market. So you can fire off a quick little scalp in the opposite direction to go back down. But definitely, if you're long through here, you're long through here. If you didn't take your profit off at the highs, that is a really big clue to get the heck out of the market because it is probably going to pull back. So quick little short side scalp back to the downside before the buyers come right back in. The buyers slam above the highs, and then the sellers try coming back in off of a major area of resistance, 48.20. But we still know that with this big of a move up, you're likely going to have the chase buyers, right? Buyers who maybe miss this 100 tick drive up. Do you think they're going to be happy about that? Yeah, probably not, right? So they're going to be looking to buy the pullback. Using historical information, we had the last swing from Friday. We broke out above it, and we're obviously treating it as support. So if it comes back to this level and shows a sign, buyers will probably buy into that for another attempted move back up towards those highs. One big thing that you really have to be careful of is we already hit a major objective to the upside, so we're probably not going to the highs. Anticipate taking profit a little bit early, maybe just a 1-to-1, something like that, but you're looking for a scalp back up towards those highs, and that is all it gave you. Beautiful bounce right back up. And now from here, we may just wedge, we may do a lot of different things, but either way, if you're trading this kind of morning and you're trading it well, you don't need to stick around anymore. It's time to go to the restaurant and grab some lunch, right? So that is a beautiful example of combining not only technical analysis, but market psychology behind what's going on to make just an absolute potential killing on a day like today. So that's going to do it for this one. Hopefully you learned something and found it interesting, and we'll see you next time.